Hi guys and welcome. On this video we are going to discuss personal loans and more specifically, the best tips that can help you get a personal loan easily and quickly. Now getting a personal loan is not an easy task, especially if your credit is not high. You might not have to give collateral if you apply for a personal loan, but since lenders do not require collateral for personal loans, the interest rate is higher. There are several things that you have to take into account when you qualify for a personal loan. Income. This is one of the most important factors lenders look at when you apply for a loan. From the lender's perspective, the higher your income, the more likely he will approve your application with an amount you desire. The lender also considers the income you have left over after taking care of other financial commitments. Credit history. This is the next most important factor, which consists of your past and current relationships with lenders. For instance, if you are late paying your credit card bill, a lender considers it a negative remark when you are applying for a home loan. If you paid off your previous loans to the lender, it makes you look more credible as you go through the loan application process. This is why it's important for you to pay your bills on time. Employment. This factor varies amongst lenders. If a lender does have an employment requirement, it's possible that they want you to have a full-time job. If you have a part-time job or are self-employed, there are other loan opportunities available. Keep in mind that these loan options are fewer in number than the ones available for people with traditional forms of employment. Moreover, there are options available for those who are unemployed and receive benefits from the government. Keep in mind that you still have to prove how you can pay the loan back. The applicant's age. This is another factor that's taken into account by the lender to determine your loan term. The younger you are, the higher the probability of you qualifying for a loan. Since lenders place a cap on loans prior to people applying, the younger you are, the better. Source of income. Lenders also consider your source of income when deciding whether or not they will grant you a loan. If you have a salary with a company that has a good reputation, it looks very appealing to the lender. Those who are employed by the government and PSUs are considered top priority because lenders consider these stable jobs. Moreover, people who are architects and doctors have high regards as well. Those who are self-employed have to show additional documents such as bank statements and ITR that supports their income. Existing relationship with the bank. Banks like it when you already have an existing relationship with them as you're going through the loan application process. Furthermore, making on-time payments on a previous loan from the same bank adds a lot of value. Lenders deem you as a trustworthy borrower. Now, what is the required income for a personal loan? Lenders differ regarding income requirements. There are lenders out there that require set minimums. You can find out what the requirements are by looking on their websites or by calling their customer service lines. Moreover, lenders also weigh your income against your debt and expenses instead of having a cutoff number for eligibility. Now that you know the factors regarding loan eligibility, let's take a look at ways to increase the probability of you getting a loan. The first thing you should do is to determine what type of personal loan you need. As you hear people talking about personal loans, they are talking about unsecured, closed-end installment loans. From a technical perspective, lenders consider mortgages, auto loans, payday loans, and credit cards personal, which is contrary to business loans. Moreover, it's wise for you to know what type of a loan you're applying for. Lenders typically offer secured loans for individuals who do not qualify for loans with prime interest rates. For instance, if you give your home or vehicle up for collateral, you can qualify for the mortgage, title, or home equity loan. Moreover, keep in mind that since these are secured personal loans, your home and/or car is at risk of being taken if you fail to pay back the loan. Another important thing is to know your limitations. If you want a loan, you should already be aware of your credit history and score. Your bank of choice should be able to tell you the credit requirements of the loan you're applying for. It's best to be proactive in obtaining your credit score report and score multiple weeks before applying. Moreover, look over your credit report and review it to ensure there aren't any inaccuracies. Lenders heavily take your credit report into account. If there are errors on your credit report, it could cost you your loan approval. Remember to always take into account your financial status while preparing to apply for a loan. Moreover, apply for a loan that you know you can afford to pay back effortlessly. A very common and useful way is to create a checklist. It's crucial for you to craft a checklist of the information you need, which is based on the information from the bank. In addition, it can take some time for you to obtain the documents you need from creditors, your employer, and other financial resources. If you don't have all the information you need, the lender can deny you easily. Improving your credit score is another factor you have to take into account. Your credit score doesn't always stay the same. Moreover, it's important for you to take actions that will improve your credit score, especially if your credit score is near the next bracket. Excellent credit is 760 plus, good credit is 700 plus, and fair credit is 640 plus. If you have a credit score of 770, improving it to 780 is really not worth your time. On the contrary, if your credit score is 680, increasing it to 770 is a significant improvement, which will increase your chance of getting approved. You will also save a lot of money because you'll have better interest rate options. The best way to improve your odds of getting approved is to always pay your bills on time and reduce your debt to available credit ratio. If you have negative remarks or late payments on your credit report, it's best to wait 6 months and not miss payments to improve your odds of getting a loan. Moreover, having a good relationship with your lender is an advantage if you have a negative item on your credit report. Write the lender a nice letter asking him to remove the negative remark. Keep in mind to apply one bank at a time. We advise you not to apply for multiple loans all at the same time. It's best to see if 1 or 2 lenders will approve of you getting a loan. Whether you know it or not, applying for multiple loans shows up negatively on your credit report. Lenders don't like that at all because they consider you a risky borrower. More than likely, the lender will not approve your loan application. In any situation during the process, don't be afraid to ask questions. When you find a loan that interests you, contact the bank personally to find out the eligibility requirements. Also, it may be necessary for you to make an appointment with the loan officer so he can go over the required materials, documents, and timelines in order for you to continue with the loan approval process. Every bank has its own requirements. This is why it's important for you to know them upfront for preparation purposes. Another tip is to be honest. Honesty is a vital attribute you have to have in order to get approved for a loan. If you're dishonest during the application process, lenders will deny your application as they evaluate your credit score and history. It's very important for you to be upfront and honest throughout the loan application process. For instance, if you are honest with us, but not successful in getting a loan, you are in a good position for us to help you in your financial situation so you can apply again in the future. It also positions you to be seen as a responsible and respectful borrower. Furthermore, if you are not honest throughout the application process, lenders will not approve your loan application. This will also prevent you from getting credit from other lenders in the future. When your credit is not so good, adding a spouse or parent as co-applicants can be a very useful step. A lot of people do this to add more weight to their loan application. Adding a family member to your application not only adds fuel to the fire, it gives the lender an extra sense of security that you will repay the loan. As a result, you'll get the amount you desire to have. Now, what if after all of these steps I'm still not eligible? Here are some things that you can do if you discover that you don't meet the minimum income requirements. First, you can always apply for a lower amount. If you're not able to show the lender you can meet the income requirements, consider borrowing less. Moreover, it's lower payments for you and less risk for the lender. The lender may also feel that the loan fee and the interest rate is too expensive for you. Lenders consider this risky. There are other kinds of loans that you can get that have lower interest rates and fees. As a result, you'll be in a better position to manage your repayments. Another thing you can do is to try your current bank. If you have a good relationship with your bank, you will be in a better position to get a loan approval. The information regarding the loan product that interests you is on your bank's website. And that's it for now. On our website, you can find more posts as well as calculators and other financial tools. Do you have your own tips? We would love to know your thoughts, so feel free to share them in the comments below. I hope you enjoyed it, and don't forget to subscribe to our channel on YouTube to get more free financial education videos.